have our third day in a row of a market downturn. And you see a lot of people are panic selling. They're trying to preserve capital, things like that. I would recommend you hold. Um, I know it's very hard to do when you see your investments, your 401k or IRA go down by 20% or 30%. But this has happened before, not too long ago. It happened during the spring of 2020 during the pandemic, and the economy made a V-shaped recovery. It took a little bit of a while, but by the year's end, it was back to normal. So, if the worst thing you could do is sell your stocks, I mean, that would be the absolute worst thing to do. So you want to hold onto your investments. Remember, you didn't lose anything. That the value of your stocks goes up and down. It's just a number on a piece of paper. What you got to look at is the number of shares you own. And if you don't sell, the number of shares you own stayed the same. Now, you can do what's called a dollar cost averaging or DCA, and that's to buy a little bit more of your favorite stocks, and you compare the new price to the price you paid before, and then this will average, bring down the average cost of your stocks, kind of like watering down the cost of your stocks. So let's say you purchased Nvidia at $100 a share, and now Nvidia is selling for $70 a share. So that's 30% discount. So you could be a buyer of stocks. Um, so the average between 170, you're looking at a total of 170. Divide that by two. You're looking at the average cost of that stock is, let's just say 170. So it's going to be about 80, $83, something like that. Um, Plus or minus a couple of dollars. So you brought down the average cost of that stock in your holdings. That's dollar cost averaging. Another concept is keeping your gunpowder dry. That means you got money sitting on the side, and you're waiting for the right opportunity to buy. And some people save thousands and thousands of dollars on the sidelines just for this reason. They're like, look, these things happen every so often, and they're tremendous buying opportunities. So they will move in when they think the market has reached its bottom. No one can tell you when the bottom is occurring, or when it's been reached, but you can get a close approximation, and then that's when the money comes off the sidelines and it comes into the market. They're really good deals, really big deep discounts on your favorite stocks, and the buyers are like, I can't wait any longer. This is just a golden opportunity. So they will move in, and then you'll see the overall stock market come back up. One of the indicators that a lot of people use is they follow um, Warren Buffett, for example. And Warren Buffett has been keeping a lot of his gunpowder dry. I mean, they're sitting on billions and billions of dollars of cash, and they have been doing that for several months. And some people have the uh, philosophy that they'll buy when Warren Buffett buys because Warren Buffett is world-renowned investor. So he is the Oracle of Omaha, for example. So there are some indicators out there that when is it time to buy? Because right now we just see things going down, down, down. Well, I would say, you want to stay tuned to the news, and I have Sirius XM satellite radio in my truck, and I listen to the business news, throughout the day. I think the big thing for me is China, because the trade deficit is so huge. It's going to have a huge impact on the stock market. So I would expect the stock market to continue to decline as long as the question of reaching an agreement with China has not been reached. I think agreements with these smaller countries, that's nice. That may give a temporary, you know, pause in the decline of the stock market, but the big one's going to be China. So, I would suggest just hold on to your stocks, pay attention to the news, Keep your gunpowder dry, maybe even week over week, add to your gunpowder supply. And whatever indicators you use, whether it's Warren Buffett or, a trade agreement with China or some other economic indicator you feel is significant, and that's going to mark the end of the decline, then that's when you want to start buying stocks. And I would recommend you start buying slowly. Don't invest all at once. Start nibbling at your favorite stocks. Maybe, a few $100s here, a few $100s there, spread it out over time. So if the market continues to decline, you didn't waste all your gunpowder in one shot. You're spreading it out. So there's a lot of different investment strategies. I'd be interested in hearing what other drivers, what their investment strategies are. So leave your opinions in the comment section. But it's kind of worrisome. There is this thing called FOMO. It's called fear of missing out, and that's when buyers start buying stock because they think that's a good price and they don't want to miss the opportunity. But the danger there is that you know no one has a crystal ball, so the next few days it price drops another, the market comes down another 1,000 points. So your fear of missing out prompted you to act into buying, but you bought too soon. The bottom has not been reached yet. Nobody knows where the bottom is. So you got to understand your own um, feelings about the market, is that you are facing this fear of missing out phenomenon, um, and patience is going to be rewarded. Even if you miss the bottom, the early stages of recovery are still great prices. Because it's not gonna rebound overnight. It's going to take weeks or even months for things to straighten out. So you continue to have great prices, even if you miss the actual bottom, and that's okay. That's probably a very safe way to go. Another one is follow your favorite politicians. And there's an app on Google Play. I'll see if I can find it and put it in the comment section or in the description when we're done. But there's an app that tracks politicians. So when the politicians start buying, that might be an indicator of when you want to start buying, because those guys are all into insider trading, especially some of the biggest politicians. They're worth millions and millions of dollars. So there are indicators out there that you can pay attention to when they start buying. You might be like, okay, well, Warren Buffett start buying, then it's safe to buy, or something like that. Um, there are some really good recession resistant stocks. Berkshire Hathaway B shares is a great one, and that's Warren Buffett is the CEO of that stock, so that's definitely a good one. I did create a video, investment tips for new owner operators. And the thing is that if you have thousands of dollars sitting in a maintenance account, it's not earning you any interest. It's there for emergencies, things like that. But you could have $10,000 sitting in a checking account and not making any money, no interest on that at all. So I recommend investing it into very safe investments, so that when a market does come down, you don't lose your maintenance account money. But if you had it invested in safe investment, then you may take a small hit, but not that much. And it's an opportunity to grow your maintenance or even your budget for a truck down payment by 10% per year or more. So there's opportunity there. There's great opportunity. There's great opportunity to buy when the market is down. I mean, if you put $10,000 into an investment portfolio when the market is down, and then it rebounds by 30% by the end of the year, well, 30% of $10,000 is $3,000. That's more money in your pocket, that miles you did not have to drive. That's money that you could be used for maintenance, or for future down payment on a newer truck. So there are reasons to invest, But on the other hand, you got to be a little bit cautious because, you don't want to lose money. Nobody wants to lose money. Um, so, take that into a grain of salt that if you buy today, the market could come down even further. When we look at the last time this happened, and these types of scenarios are often called black swan events. They rarely happen, but when they do, it has significant consequences for the stock market. The last time this happened was spring of 2020, and the market declined for a month straight. Slowly, it declined, 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 declined. Because the pandemic. But after a month, it started to rebound. And then by the end of the year, it fully recovered. So you don't want to panic and sell your shares. Don't do that. You didn't lose anything. You still have the same number of shares you had before this started. And likely by the end of the year, we'll be back to where we were. But there is opportunity to take some of your savings and invest it when you feel it's the right time. When you feel we're near the bottom or at the bottom or slightly, coming out of the bottom. Those are all great opportunities to buy. All right, guys, that's all I got for you. Thanks for watching. We'll see you on the internet.